Good morning, guys. Welcome to this Thursday, September 18th. And look at this market. Go figure, right? From giving me a big scare yesterday when the news came out and Powell started talking and talking and talking, and market was tanking and tanking and tanking. After a while, it reversed, got a little bit sloppy, and then it started off a nice little rally, and then overnight, straight up. Straight up. So, okay, we'll take that. So I guess the market digested the information well, and we're not looking at the little meltdown, which I was really, really concerned about for a while there. So there you go. That just tells you that time to trade on your expectation of what the market is going to do is usually a very difficult thing to do. It's better to trade what you see and what the market is actually doing. That's usually much better recipe. But at this point, market is definitely to the upside and holding on pretty darn good. Now, news this morning, we have at 8:30 we get jobless claims, Philly Fed. We have the leading indicators at 10, and nat gas report at 10:30. 10-year tips auction at 1. So everything happens at 8:30, I think, in 10. So leading indicator, Philly Fed, and then leading indicators. And then tomorrow, the only thing we have tomorrow is quadruple witching options expiration. So that's what's going on Friday. So that could be a little bit choppy tomorrow when that kicks in. But at this point, I think we have a pretty. We'll see how the jobless claims comes out. If that's going to be another higher number, that would be a pretty good sign that the labor market is weakening pretty good. So, but at this point, looking at what we looking at the almost gap closure yesterday. That's a pretty good healthy sign when they run it down like that and kind of clear the air. And the fact that they reversed it that hard, it just tells you that the market wants to go higher, and we are pretty much going to be in a spot where they try to take it higher. So I'm going to fold that back together again. Consider that almost a gap closure, and starting off on the long side of the market. Looking to buy against the support 67.06, 66.95, 66.85, 80 down to that 75 level. If they retrace below that London low, the 66.85, 85 to 88, this London low here. If they start taking that out, I would probably take off the long buys and go back to range bound. Not necessarily leaning short, but at that point, I think this whole move may be reversed at that point. Still looking to buy against support at 80s, 70s, 60s for rotations up. So not necessarily giving up on the long side until we are back down below that 66.40 again. So if they start going below 66.40, back on the short side. At that point, we have a really good reason. Second time that happens, I think we're heading lower at that point. So today's going to be very interesting to see how the overall day develops, and if this momentum we have going into the trading day is going to keep going. We are in the move out of the middle to the upside. I would not be aggressive on the short side at all. If anything, it would be the normal, a big run, little nice retest failure sets up, look for a small short. But always, those any short you take in the move out of the middle dynamic, you have to be tight on your stop and not get caught in a big trade, because you start running against you, you start repairing it. That's when you get caught, and that's when you blow up your account. So don't expect any relief on the short side if you're trying to take short trades and get stuck in it. We are in a move out of the middle to the upside, and the chances are they're gonna try to squeeze that to the upside as much as they can. But initially, if we do get some weakness, I'm going to be looking at buying against that 67.05s, the 66.95s, 66.85 to 88s, 80s, 75s for rotations back up. Taking off my long bias and below that 85 to 88 support there, that would be the London low. So that's kind of how we get started. And then let's see if the this strength we get in the overnight is going to extend into the day session, or if they're going to try to just knock it down. All right. So of course, if they do back off below that London low, You just go back range bound. Still look to buy against these supporters as they knock it down, but it's there could be an opportunity for a short if they start to retracing more than that. I would not be super aggressive on the short side though, until I see maybe 70s, if probably even that 60s come out. That mode from yesterday comes out, and you start flirting with this level down here. You're still looking to buy against them, but it's a lot less aggressively, and opportunities for potential shorts as they start moving lower probably becomes more obvious. So that would be like a big move to the downside in the as the early weakness. You're looking for a pullback of some sort to get short and to see how far they can take it. That would be the entry on a move like that. But I'm not going to assume that's happening. That's just a potential if they back off below that 66.88 to 85 to 88. At this point, still leaning towards the long side of the market to get started. They're going to buy against these support areas and taking off the long bias and below that 85 to 88s, and starting to worry about the short side below that 60s. Below 40s, we have confirmation. There's no reason not to be aggressive on the short side if they're heading that far down. And as I said the other day, when you saw this little move to the upside, you always have to be cautious about when the overnight pops up like that, like this. We do have a reaction behind us, so there is a reason for a little bit of optimism on the long side, but sometimes you get that little pop to the upside in the overnight, and the day session just knocks it flat down. So we had to be a little bit aware of that. But we'll see that coming. That's gonna be pretty obvious if that's happening. So starting off from the long side, let's see if they can take it. Based on the yesterday's news, digesting the news, I said that at the close of yesterday, you had to see how it digests the news, and usually the day after is when you get the better reactions. And so far, it looks pretty freaking good, so we'll take it. All right, so we'll leave it there, and let's take a look at the bonds and the Nasdaq. Bond market pretty much just holding in a range, not going very far at all. So I would just start off range bound on the bond market, same as we have been. Just it's trading in a range, just go back and forth. And whatever they end up starting, look to get the long setups 3 levels down. At this point, it would be at the 1716s, 1710s, 1706s, 1702s for rotations back up. They're going to sell strength 1720, 26s, 118s, 11806s for rotations back down again. So that's the approach on bonds. I don't think that's going to be. There wasn't a big move yesterday, and I'm not seeing one happening today at this point either. Doesn't mean it can't, but I'm not seeing it just yet. So starting off range bound, let's see if we get any kind of directional move on the bond market today. If anything, it would be higher and the yields come down. That would be the best way to go, right? Nasdaq also popping pretty good in the overnight. So same reaction as the ES. Not quite as hard on the gap closure. Didn't even get quite as far down here. So a bit of a gap left here to close on the Nasdaq, but look at that reversal right back up and then straight up, and we are in the move out of the middle to the upside on the Nasdaq. Let's see how far they can take it. So same story there. They're going to buy weakness against the. Let's see. Scroll this up a little bit. Against the 24,680 to 90s, the 640s, the 600s. If they trade below that 600s, I'm going to take off the long bias. Still looking to buy against support at the 550s and 500s, but a little bit less aggressively. They see a nice volume edge here at the 550s. If that comes out, I think we right back in that lower range again and potentially seeing some weakness. That would be backing off pretty good. So if they back off that far, I think we may have a little bit more selling coming our way. But still, as they keep backing off, you can still look at all these buying opportunities until they start trading below that I would say the 380s, and then confirmation below that 320s. But again, when that starts happening, you have a pretty good early weakness dynamic happening before even that can happen. So at this point, still looking to buy weakness for rotations up. We shift our bias below this 24,600s. Definitely below the 24,550s for rotations back up. So still looking to buy against these two support areas. But I'm taking off my long bias at 600, be less aggressive on buying in the 550. Still looking for it though. And let's see how far when they get down into this lower range, if they're going to try to push it any lower at that point. At this point, we starting from the long side and not going to be very aggressive on the short side. No reason to. If anything, look for a long opportunity, see how far they can take it. That's kind of a price discovery to the upside. And any short trade like you have right now in front of us. You see this, they ran it hard after that. They stalled. You always have an opportunity for a small short there. Could be a little bit bigger short as well, as you can tell. But the volatility is still there. The rotations back and forth are still there. You just have to not have huge expectations on your short if you try them, and you have to keep your stop tight. So if you're trying to get short up here, your stop should be pretty tight. And if you manage this little pop, manage to shake you out, then so be it. Much better to get shaken out with a small loss than to get stuck twisting in the wind, just seeing that thing just squeeze your account, you know. All right, so both ES and Nasdaq traded from the long side of the market. We know when to shift bias on those two if they start pulling back. But let's see. Let's hope it not. I mean, I'm thinking digesting the Fed announcement and the rate cut and the new stance going into the fall here, and the market looking at that, say, okay, it's good enough. We are going higher, and let's see how far they can take it. On oil and gold, I have rolled gold now to the X expiration, so make sure you're on that one. So the November expiration is what we are trading right now on oil. Not much, not a big change. I'm still just trading in a range. So just start off range bound on oil. Look to sell strength, 64, 64.30, 64.60 to 70s. Look to buy support, 63.60s, 63.10. 62.80s down to that 62.50s. So basically 3 levels down, 3 levels up, range bound trading on oil. Let's see what happened now after the rollover. So that could be a nice move happening after the rollover like that on oil. So right now we are right here at the tractor point. Let's see if if there's gonna be any kind of directional move going on oil. But if you're trading it, start off range bound and then let it show you if it's going to try to take a direction or not. And on gold, and gold is just pretty much consolidating a bit, I would call that. It's they had a pretty freaking good run. They've been right up here at the 3700s, and they probed a couple of times to the upside, get knocked down. And this is the same kind of dynamic I'm talking about on the ES and the Nasdaq. You have a nice pre-market pop to the upside, and the day session just reverses it. Gold is a prime example for how that works. You have, especially since you have a lot of trading happening in the London session on gold, and so they're way up, and then you get the hard knockdown on that. It doesn't have to happen like that on the ES and Nasdaq at this point, though, but that's always something to keep in mind. Pretty good knockdown in the overnight right now. They're down here all the way down here to that 3660s, 67s, and now they're back up again. So I would expect them to be trading around this area, the 3680 to 3700s, and start building value. If they start trading up above, I would say the 3700s to 3725. We had this level here at the 3715s before, which is a nice reverse retest area. They're below it now, so I would stay range bound until they get up above it. And definitely above that 3725s, when they start taking that out, I think we're right back up in this upper range again. So 3715, that's our it's a little edge right here before we get into that little high volume area. But see a nice little power that tractor going on there at 3720s. So I would look for that 37.15 or 14.15 to come out. If they traded above it, I would be back on the long side. If not, I would look for short setups against 05s and the 14, 15s for rotations back down. And if they take out the 14s, I'll stay on the long side and see if they want to try to take this higher again. So that's gold. It has been pretty choppy lately. I haven't tried to trade it a whole lot. It's unless I see really good opportunities, then you see this slop is just difficult. It gyrates hard, goes back and forth, and you can easily get shaken out of those trades. So good opportunities, worth taking. Otherwise, I'm staying on the sidelines when it comes to oil and gold at this point. But remember, we rolled oil to the November expiration for today's trading. All right, back to the ES, and everything is kind of where we left it. So key question today, are we going to get continuation on this overnight strength? I hope so, and but we know when to change that bias. Also, we do have this is a reaction of the Fed announcement, so it's not that just a came out of nowhere. So that kind of gives you a little bit more confidence that this may continue. All right, guys, we'll wrap it there. I'll see you back at 11:30 for the next update. So good trading, and I'll see you back then.